Anthony Aluzzi. I'm a client relationship consultant here. Today's discussion will be revolving headlines. We're going to cover some of the basic reports that you have available to yourself at the start of the simulation. I'm joined here with Curtis. Curtis?
Hey, I'm a colleague of Anthony's. I'm sitting in today to see how he gives his webinars.
So keep in mind that the first 15 minutes of the webinar is dedicated to the content. The second 15 minutes is going to be dedicated to your questions. Keep in mind that a lot of the questions that we're going to address are probably more generic, so everyone can kind of see benefit from those questions. If you do have any specific questions, please feel free to direct those at CAPSIM support. We have a full staff dedicated to answering any of your questions, and those can be more specific. So the number there is 877-477-8787. This will be recorded, so you don't have to take notes if you want. They'll be placed on our website. At the end of the webinar, I'll show you guys where you can find those recordings. So for the sake of today's webinar, we will be using Capstone as opposed to Foundation. The reason why is because I think Foundation, or at least using Capstone, is more inclusive. So it's going to kind of adhere to more users as opposed to just using Foundation. So that's kind of the reason we're using Capstone. Again, if you do have any questions pertaining to Foundation, please feel free to give us a call or support line. We're more than happy to kind of address those inquiries. Also, if you do have any questions, please feel free just to type them. We'll definitely be sure to address those at the end of today's discussion. So without further ado, we'll jump right into it. This page should be relatively familiar to you. We're looking at the Capstone course page. This is the first page you see when you log in. So we're going to go ahead and we're going to click on Capstone. Let it load. All right, so this is the student dashboard. Let me actually minimize this for you really quickly. There we go. So again, today's topic is revolving headlines. So we're going to cover a lot of the basic reports you have available to yourself from a high-level perspective, how I see them used. Curtis will probably chime into just, with things I might miss out on. Let's jump into it. We're going to go reports, and we're going to be primarily looking at industry reports. The way I like to think about it is industry reports are used primarily before and during decision-making just to kind of aid the overall quality of decisions. So our primary focus today is going to be the industry conditions report, the Capstone Courier, and the annual reports. So most in depth, we're going to cover the Capstone Courier. We're going to briefly touch on the industry conditions report and the annual reports. So the first one we're going to jump into is the industry conditions report. So you'll notice that this pretty much is exactly how it sounds. It kind of gives you an overview of the initial conditions at the start of the simulation. So this report does not change. It's always going to be called the industry conditions report. It's always going to be available to you. Either in a PDF version or in a web-based version directly from your industry results reports page. So you'll notice it kind of gives you an overview of the segments and where your products are currently positioned inside of those segments. It'll give you some drift rates. This is very helpful for determining where the ideal positioning is going to be, and let's say round 5 or round 6 down the road. This report is imperative to at least be familiar with because it kind of lets you know where customers prefer products to be positioned at each year, and you have the ability to calculate the ideal positioning using the segment centers table in Table 2, and kind of using that in tandem with the ideal spots table shown in Table 3. More specific questions about that, please feel free to CAPSIM support. This is definitely something that will help you to kind of strategize. You might determine that the high-end segment moves faster. Therefore, it might be, important to determine, what automation level, for example, is going to be ideal for that particular segment. It also shows you the growth rates for the segments. So this allows you to determine, how is the segment growing? Does this differ over time? Is this something that I should be paying attention to? And the answer is yes. We also show you the ideal positioning, among other things, for each segment respectively in round 0. So we're kind of telling you where does each customer place their focus and what are they looking for in a product. So this gives you the initial conditions for round 0 in all segments. And then lastly at the bottom here, it shows you what the actual interest rate is at the very bottom. So if we scroll all the way down, the interest rate is shown at the bottom. Curtis, anything you want to add to this?
Yeah, I think this report is great for illustrating. If we kind of look at the yellow areas here, Anthony can show you can see there's the fine cut, rough cut. The yellow areas are areas you really want to stay out of. So this is a great way for students to actually look and visualize where those spots, where you shouldn't go, like most particularly with age. If you look at age, there's a rough cut. There's a penalty that your product will incur If at any point during a year your product either goes into the yellow area, the rough cut, with position or with age, it's like pricing your products like $4 or $5 above the specified range. That's also like going into the yellow area. So looking at this industry conditions report, if you can visualize the areas where the specifications you should not allow your product to go to, I think it's very, very beneficial.
Yeah, and that's a good point. So I think this is really a more visual way to look at what customers are requesting they see in a product. We'll touch more on this when we look at the Capstone Courier. This information holds true to the foundation simulation also. I mean, we're giving you the same information. We're just looking at more because we're focusing on Capstone today. But this information is all relevant for foundation. So in a nutshell, that's the industry conditions report. Let's jump into the Capstone Courier. The Capstone Courier is, in my opinion, one of the most important documents you're probably going to reference when making decisions because it tells you what happened over the course of the previous year. So you're going to take this information and you're going to say, okay, well, from a company perspective or from a strategic perspective, what things did we do well? What things didn't we do well? What did our competitors do? How can we beat them to the punch? How can we do things differently to have better outcomes? So at the start of the simulation, you always have a round zero report available in HTML or PDF. Both are the exact same thing. I just like the HTML. I don't know, it's right there. So we'll jump right into this. So the purpose of today's discussion is pretty much to talk about how I find use in each of these pages. Some are going to be more important to me than others, at least more so in the beginning of the simulation, simply because all teams are actually created equal. So you'll notice that depending on whether you have 4 competitors, 5 competitors, or 6 competitors, that's decided on by your instructor. In this particular game, we are assuming the role of the Andrews company, and we have 5 competitors. Each column is a competitor. So looking at page 1, I feel like this gives me a pretty good high-level overview into the industry itself. So there's a lot of information that I can pull out of this that kind of gives me information about the overall health of the company. So some things I might be interested in looking at here as the rounds progress. Number 1, emergency loan. So this is going to imply bankruptcy. It means you're not managing your cash very well. Other things I might pay attention to are sales. Sales by itself doesn't really mean your team is successful or not successful, but we know the industry is growing at a certain rate every year. When we were looking at the industry conditions report, we can determine who's growing above the average and who's growing below the average to kind of give us some benchmark as to who has the most market share, which is also indicated by this graph. Another thing I would look at is obviously profits and then also the contribution margin. So as a benchmark, we typically say at a minimum you want to be above 30% for your contribution margin, optimally above 36%. So this is just like saying after I've paid for all my variable costs, I have 28.3 cents over for every dollar of product that I sell. Obviously, the higher this number means the more money I have left over after I've paid for a large fraction of my costs, which means my profitability is going to go up also. So those are some quick things I like to look at on page 1 because they give me a pretty good bird's eye view into the health of each company. Notice everyone's the same at this point, but over time, these things will start to differentiate from one another, and it'll provide you with some more feedback. Anything you want to add to that, Curtis?
No, I think that's a good general overview. In the first couple of rounds, this seems to be the profit is where all students seem to focus primarily. Just want to say that don't focus too much on profit right away, especially if you're making investments and you're growing. The companies who make more strategic and effective investments are usually the ones that do the best using their resources. So a growing company it might not seem like it will be as profitable as first, but the investments usually pay off. So this allows you to keep a pulse on all the teams, but it's one area you want to put too much focus or too much weight in the first round or two strictly on profit.
That's a good point too, because I mean there are short-term goals and long-term goals. You have to evaluate. What are you being evaluated on? How is your team looking to meet those goals, exceed those goals, and kind of what to shoot for? So profit is really only one facet of the organization. It's an important one, but like Curtis said, it's not imperative that you place all your emphasis there, at least in the beginning of the game. So that's page 1. Page 2, you don't see a lot of students pay a large quantity of attention to, just because it's kind of it's a little bit elusive, in my opinion. So a lot of students might pay attention to maybe the dividend, maybe the stock price, because they're familiar with those terms, having maybe been exposed to a finance class or two. In my experience, paying so much attention to this page isn't really that important in the first couple of rounds as long as you're making stronger, large picture decisions. One thing I will mention is that your stock price is primarily driven by your earnings per share. Your earnings per share is essentially just letting you know how much money does each of your stock prices earn in profits. So the higher your profits and the lower quantity of shares you have, the larger your earnings per share, the larger your potential stock price. There are some other things that are going to be factored into that, but in a nutshell, focus on, said profitability to some extent. The bottom of this page just shows you how much debt you have on your balance sheet. You'll notice that at the start of the simulation, every team has 3 bonds that are going to be due over the course of the simulation. So kind of pay attention to when those are due because you will have to pay those off. Looking at page 3, page 3 is a kind of a condensed version of all your financial statements. We'll take a look at these too when we jump into the annual reports. But your top third is going to be your cash flow statement survey. This is really useful for diagnosing emergency loans. So more on that once we kind of get further down in the webinar series, but this is a good way to determine where your cash is going over the course of the year. The second third of this page is your balance sheet. Your balance sheet tells you what you own as a company, is your assets. It also tells you what you own, and it also, your liabilities, and it also tells you your stockholders' equity too. So the most basic rule in accounting is your assets always equals liabilities plus owner's equity. The third annual report you have available to you is really just a condensed version of your income statement. This is useful from a high level. It really just shows you sales, variable costs, period costs, and net profit. So you'll be able to see this report on a more product-by-product basis shown on the income statement when we look at the annual reports. The fourth page can be a little bit overwhelming because there's a lot of values here. So if you're a more visual learner, this page might not appeal to you as much, but there's a lot of content here. So some people might argue that this page is one of the most valuable pages in this document because this is a great page for competitive analysis. So every name listed here is a product. These 5 correspond with the Andrews team, which is my company that we're assuming. These are going to correspond with the Baldwin team, Chester, and so forth. So just to simplify things, each row is going to indicate a product. So if I'm on the Andrews team, I'm interested in looking at my competitors and also my products. So I might be saying, okay, well, how many units did I sell this year? How much did I have left over in inventory? Did I overproduce? Did I underproduce? Did I stock out? I'm also going to pay attention to the middle kind of section of these rows because this tells me where my products are currently positioned, what its age, and what its reliability. So these are the things that customers are looking for. It allows you to do a type of gap analysis to say, okay, well, my product is here. Where are my competitors' products? Another reason this is a good page to look at is because we offer the cost structures of each product, and we tell you how much capacity and automation each competitor has for the next round. This allows you to determine, okay, well, what opportunities does this competitor have over me? Are there any threats in this industry? So this is a great section to kind of conduct a mini SWOT analysis, just looking at strengths, weaknesses, opportunities, and threats. And I think, again, some would argue that this page is pretty important because you need to anticipate what your competitors are going to do. Curtis, do you want to add on to that?
I just think revision date is also very useful to let you know if new products are coming out or when there's upcoming changes to existing products. So that it also allows you to keep a pulse on the competition.
Exactly. So again, just reiterating the fact that when new products do come to the market, they're going to be listed here if capacity was purchased. But in a nutshell, it tells you what your competitors are doing. How does that impact your decisions moving forward if, the Baldwin team is coming out with a new product? That's something you need to consider when you're forecasting, when you're producing, because that could change up the industry, that can change up the game, and that, at the end of the day, is going to potentially affect how much you're selling, which is why it's important to reference this information. Moving down to page 5. Pages 5 through 9 are pretty much identical. If you can read one, you can read the rest. Page 5 refers specifically to the traditional market segment. Each page is structured identically. In the upper left-hand corner, you have some brief statistics about this particular segment. We're telling you how many customers wanted products this year and also what the growth rate is. So this section is very useful for forecasting because it allows you to get a gauge on how many products are going to, or how many customers are going to exist in this particular segment next year. Underneath that, we also have some very, very important information about what the customer is looking for. So like Curtis mentioned, this is a more value-based I guess, value information about what the customer is looking for as opposed to the visual information that we saw in the industry conditions report. This information is very important to pay attention to simply because this is what your customers are asking they see in a product. So as the R&D manager, you're going to want to make sure you pay attention to this, which is something we'll talk about too at the upcoming research and development webinar. Towards the middle, you have some information about your product, where it's currently positioned on the perceptual map, and you also have the actual versus potential graphs, how much you sold versus how much you could have sold. Moving down, you have some information about the products that are selling in this particular segment. Again, really good for competitor analysis, who's allocating what to the promotion budget and the sales budget respectively. So we're only going to cover page 5. We're going to skip pages 6 through 9, again, because they all look the same. The structure is important, placing emphasis on the upper left-hand box, the actual versus potential graph, and also kind of viewing what products are being sold in that particular segment is very important, especially when making your decisions for the subsequent round. We're going to go to this page right here. This is page 10. So this is a different way to approach looking at the actual versus potential graphs. In my opinion, this appeals more to the numerical learner, whereas the graphs shown on pages 5 through 9 are more for your visual learner. It tells you the same thing. The left-hand side tells you how much market share you had in units per all of your products, and it tells you how much you could have had if you were to supply your demand. Again, more on that during the debrief and kind of looking at how to forecast, because this information is very useful for forecasting. Lastly, you have a larger blown-up version of all 5 perceptual maps as they're shown together currently at the end of this year. Keep in mind that this report is referencing the end of round 0 before you all inherit your company. So this will change over time since your companies will begin making decisions that kind of attempt to deviate or differentiate yourselves from other competitors. And then you will disregard this page for the time being, mostly unless your human resources module and or total quality management module has been turned on by your instructor. You might want to refer to your syllabus or to your instructor for that information. Curtis, any final words you want to bring up for the Capstone Courier, the Foundation FastTrack?
Anthony covered it really well. I think the one thing that I would add to that is that there's a customer survey score provided to you, which lets you know exactly what the customers think about your product in that industry, and it allows you to compare the quality of your product to the other products in the industry with a numerical value. So that can be really useful moving forward if you kind of understand how that number is derived.
Yeah, and there's more information about this number inside of the team member guide. The team member guide can be found in an online format and a PDF format. And this information is really useful for forecasting too, so this will definitely be covered during the forecasting webinar in a couple of weeks. So be sure to attend that if you want to hear more about the customer survey score. But in a nutshell, that's how I see each page being used. I think for the most part there's a little bit of subjectivity here. Some other people might approach referencing this document a bit differently. Just in my experience, that's kind of what I would pay attention to on each of these pages. So that's the Capstone Courier. Briefly, we're going to look at the annual reports. You're only going to have the annual reports for your company. So we're going to view HTML very quickly. These are more in-depth. This is pretty much a expanded version of what you see on page 3 of the Capstone Courier. So since we're on the Andrews team and we're looking at round 0, you will get another one of these reports each round. So after round 1, you're going to get the annual reports for round 1 that shows what happened over the course of the year. Same thing goes for the Capstone Courier. So those are pretty dynamic. You get one of those each time a round is in process. So you can reference that information for the subsequent round. So again, your balance sheet just shows you what you owned versus what you owe and how much equity your company has. Again, assets always equals liabilities plus owner's equity. So that's why it's called a balance sheet. Your assets is always going to be balanced with liabilities and owner's equity. Some definitions on the left-hand side are pretty useful too if you kind of want to dig a little bit deeper at some of this information and kind of how it really helps to supplement each department itself. The cash flow statement shows you where your cash is moving throughout the entire course of the year. Like we mentioned from page 3, this is very useful for diagnosing emergency loans. It's very helpful. If you did receive an emergency loan, you can say, hey, where did a lot of my cash go over the course of last year? It definitely helps to aid decision-making, especially for the next round. Finally, you have your income statement, often referred to as a P&L or profit and loss. It just shows you how much sales you had, how much you paid in variable costs, which is direct labor, direct material, and inventory carrying costs. Then you have your period costs, which is depreciation from your fixed assets, your sales, general, and admin, so things like research and development costs, promotion, sales, and admin. These two are marketing, and this is actually human resources. So at the end of the day, that's all added up, taxed, interest taken out, profit sharing. Then what you have is your total profit. This is the number that's going to be shown on the first page of the Capstone Courier that Curtis mentioned earlier. Really, this is a good resource because it kind of breaks it down by product for you, unlike page 3. Page 3 is an aggregate report of this, but this will show you what products specifically are losing money, if any. So definitely a good resource. Curtis, anything you want to add?
No, I think that was perfect right there. Paying attention to which products are actually making you money can be very, very beneficial. A lot of students won't realize that some of their approaches with specific products just aren't feasible. So if you look at this page here, it actually breaks it down numerically for you to make those R&D type decisions. Or do we get rid of a product? Do we change it? Do we charge more? If you look at these line items here, it'll really help you make those decisions.
Definitely. At the end of the day, the main purpose for these documents is to aid your decision making. You know, we give you all of this factual information, say, hey, this is exactly what happened last year. It's your responsibility to kind of filter through this and say, okay, well, based on the information that I'm provided, what are the best or the most optimal decisions that I can make moving forward based on what this report's telling me? You know, we mentioned earlier about defining a strategy if that's one of your primary goals for the outlook of your class. You know, it might be, you know, focusing on a couple products specifically. So there are a lot of resources and a lot of different pages that kind of tell you the health of your company, how many products you're selling, and kind of comparing those with your competitors' products. So paying attention to this information is up to you, kind of what you want to take in, but it's all really there to help aid decision making. That kind of concludes the 15 minutes. We kind of went over a tiny bit, but that concludes the 15 minutes of the content that we're talking about just for the actual industry reports. So we have a couple questions here. The first question we received here was, what do you think is the single most important information found on the Capstone Courier report? So like I mentioned earlier, I think this is more of a subjective question. In my opinion, some people might say page 4 because there's a wealth of information there. What I kind of say, I think, is the customer buying criteria. The customer buying criteria is kind of central to the entire organization itself. So I've seen some really crazy things. If you look at that information, we're telling you the secret to the game. We're telling you this is what your customers are looking for. It's up to you to tailor your product specifically to meet customer expectations in that particular segment. You know, you want to focus on this year rather than 10 years down the road, although thinking strategically long-term is never a bad idea. Also keep in mind that these reports reflect what happened last year. So if your customers are saying last year they wanted this, that might be different for the next year. So it's kind of important to use these resources to calculate where your customers are going to prefer their products for that year. Curtis, what would you say is the most important information to you when referencing the Capstone Courier or the FastTrack?
I think it relates to directly what Anthony just said. Understanding that criteria, and then you look at the customer survey score, which is based on the criteria that you just mentioned. If you understand what that score means and how it compares to how your product compares to the competition, that's really what you need to like we'll talk about it like Anthony mentioned before when you forecast, but it's very, very beneficial. So it's a numerical value that I think is one of the biggest keys behind this. But like being successful in a simulation, that's probably the most underutilized bit of information that people don't realize is there.
And that's definitely a good point. I mean, all this information is useful in some form or fashion. It always comes down to, you know, what your strategy is, what information is going to be most useful to you. But I think that it kind of explains how different people can have different approaches to what they value most when looking at that document. Another question we got, a little bit more specific, but the question is, if we talk about R&D, there is a revised date column. If we introduce a new product into the market, the revised date might come as November. If that's the case, is the product going to be sold in that year? And the answer is if you have capacity. So if you create a product and the product is set to be released to the market in November, you're technically going to sell from November till the end of the year. Now your sales for that year might not be optimal because you have to remember that your product is comparing to products that are being sold over the course of the entire year. But The short answer is yes. It is contingent, however, on if you've purchased capacity, because capacity is needed to produce that product. So someone else asked, what is the ideal customer survey score range? As high as possible. So the maximum you can receive is 100. Some people here say it's kind of like a beauty score contest. It's really how your customers view your product based on every attribute that actually affects their demand. So the customer survey score is based on the 4 customer buying criteria: ideal positioning, mean time before failure, which is reliability, the age, the price. It's also based on your promotion budgets or your level of awareness, and it's also based on your accessibility, which is the sales budget. And then finally, it's based on your accounts receivable policy. So all those things factored in create your customer survey score, and the maximum score you can receive is a 100. In the first couple rounds, you would expect your customer survey score probably won't be as high as you expect it to be because you're adjusting your products. Everyone else is doing the same, relatively speaking. Towards rounds, I don't know, 4 or later, you can probably get it relatively high if you're focusing on your customers specifically. Curtis, what do you think about that?
Yeah, I think the numerical value you see is derived from, and I'd probably recommend you look this up on the online student help guide just to kind of see exactly how it works, but I can briefly describe it. The better your product is aimed at satisfying the customers in that segment, in addition to the level of promo budget that you have, so which will be awareness, and then sales, which is accessibility. Those 2 numbers can play huge, have a huge influence on your ending customer survey score. So when you understand how those values change through time and you see them compared to the competition, that's what's really, really beneficial. Sometimes you'll see a product with half the customer survey score as one of its competitors, and they won't understand why that product is not selling as well as the others. And so that little bit of information kind of lets you identify which products are doing the best in that segment, and then you can kind of figure out why that happens. And that's the beneficial part, is figuring out why and understanding why products have higher scores than others.
And I think that hit it perfectly on the head. I mean, that's the purpose of the document, right? Is to conduct some type of competitive analysis on your products, but also your competitors' products. Find out, why is one of your competitors' products maybe have a lower customer survey score? Maybe they have higher sales. Well, maybe the answer is that their product came out early in the year, so they have more opportunity to sell that product. So I mean, it's really kind of diving into those pages 5 through 9, determining why your customer survey score is how it is. It's invaluable, like Curtis said. Couple more questions here. Are the promotion and sales budgets spread over the year for products that won't be released until the 3rd or 4th quarter, or is that expenditure only effective during the period that the product is available? Your sales is going to affect other products being sold in that segment, because your sales budget affects the entire segment. So if you already have a product that exists in a given segment and you have a budget for your sales budget, it's also going to impact that particular segment's level of accessibility. If a new product comes out, let's say in 3rd quarter, I don't know, probably September, it's then going to receive that level of accessibility, but the promotion budget is then going to be adopted, because the promotion budget is on a product-by-product basis. So a little bit different of a relationship here between promotion budget and sales budget as it pertains to the overall product. That's something that we might cover more so in the marketing webinar that will be conducted on Monday. Great question, though. We have time for probably one more question. How much time should we spend looking over the Courier? This is a great question. I think it's going to range based on what information you look at. I mean, you have some students who are really, really interested in diving really deep into the Courier, kind of really finding out, some of the things like Curtis said, paying attention to that customer survey score. Why is it the way it is? How are ways we can improve? You might have some other students who briefly look at the Courier from a high-level perspective and say, okay, we had great sales, but we didn't have a lot of profit. What does that mean? Maybe that means that you didn't effectively reduce your costs, and someone can pull that away just from looking at that information very quickly on page 1. Other students might say, well, no, let's look at the income statement and look at by product basis. Which of our products isn't earning as much money as it should, simply because we're paying too much to create that product. So in my opinion, I would say it depends. Curtis, what are your thoughts on that?
I'd say it's as much time as you need to really understand what it is your competition is doing. Some people will look. Part of that might be how many products do you have. Do you have 8 products? Do you have like 4 products? If you have 8 products, then you're probably going to have to dissect the results a little bit more in depth. But really, it's probably, it is like Anthony said. It kind of depends on the person themselves and what it is you're trying to what you're trying to take away from the data itself, extrapolate. So I would say at least 20 to 30 minutes each round at the minimum. Then if you need to like look at it further, then that might work as well.
Yeah, I would say at least 20 minutes is probably a good arbitrary value for taking a look at the report. I apologize. Some people, I feel like you still had some questions. I apologize. We kind of ran out of time. I would encourage you to please contact Capsim Support. Like I said, we have a staff dedicated here to answering all of your questions. 877-477-8787. We're going to log out here. I'm going to show you where you can access previously recorded webinars or where to actually enroll for future webinars. So we're looking at our home page here. We're going to click on the Events tab at the top. And then we're going to scroll down to the bottom. We're going to click on Webinars. And then underneath Student Webinars, currently we have 2 that are recorded. You can just click Watch the recording right here. This is the Revolving Headlines webinar today. This is where you can actually register for future webinars, or you can watch previous webinars. And our contact information is going to be actually on the contact page. So again, just reiterating, this is our support line for anyone in North America. We also have a toll-free number for anyone outside of North America too. We look forward to seeing you guys on Thursday at 1 p.m. Central Time. That'll do it. Have a wonderful day, guys.